The weakness and apparent vulnerability of the rand has created some concern in investment circles, with many fund managers actively trying to mitigate the risk by buying the shares of export companies. So how bad can it be, and which companies will be negatively affected by a rapid rand depreciation? Roger Williams from Centaur Asset Management joins us in studio to give his views. Roger, thanks for joining us.
Pleasure.
You've mentioned that, with the current account deficit above 6%, the rand is vulnerable. It's something we've heard a lot about from fund managers sitting in your seat on this show. Yeah. How does this all play out? Because the thesis holds, if you're getting the money in the capital account, which we seem to be doing, coming and buying our bonds and shares, it obviously compensates for the current account deficit. So how does the situation unravel?
Well, I think we're in a very vulnerable position. We're totally reliant on foreign inflows to finance our growth at this stage. And really, if they take fright and stop funding us, then there can be a crisis. And there's a lot of precedents for this. Mexico in '94, Thailand was a famous one, which sparked the whole emerging market crisis of '98. That was in '97. And then also Argentina had a current account crisis in 2000. And there's nothing really that I can identify that will spark this. But I just think the risks are very high.
So obviously the thesis is that we've had many fund managers buying rand hedge stocks, buying export companies. Even at levels, we've seen the likes of SAB Miller and some of the larger companies like Sasol still comfortable with valuations in many of those large cap shares, for instance. Yeah,
listen, I think you have to look at scenarios, how it plays out. So I think there's probably a 50% chance of a currency crisis in the next 3 years. And under that scenario, SAB will be a lot better performer than some of the banks, for example. So you really have to look at treading a middle ground. I'm not saying it will definitely happen, but SAB is probably a safer bet than some of the others, even though it's on a forward P of 20. Whereas British American Tobacco, which is a global multinational with an exceptional track record, does not look that fully priced on a 4% dividend yield on a 15 times forward PE. And if we do have a currency crisis, that will really come through totally unscathed and be a great hedge.
So the obvious situation with the currency crisis, and I mean, I have to kind of push you here and say, well, we had Marikana last year, which was very devastating. We had some other bad news that affected the country at the same time. We're kind of seeing public finances now starting to look really stretched, and there's obviously concern that our debt to GDP ratio is obviously becoming quite high. But if we survived last year and we're now at about 9.20 Rand, I think the last time I checked, to the dollar, what's it going to take to really push us into a full-blown currency crisis that would, I imagine, have to take us to the 10 or 11 Rand mark to cause this kind of damage that we talked about with those previous examples?
Yeah, I think the fiscal debt to GDP is not the major concern. It's really the current account to GDP, which last year was 6.3%, and really what happened was it went basically from 3% in 2011 to 6% in 2012, and the reason was really our commodity exports declined probably about 3 or 4%, and then also our terms of trade got worse. Platinum, which is a key export, dropped, iron ore dropped, coal prices dropped, and that really swung the balance. And as we look at this year, those things haven't really improved. Oil prices are still high. We still have to import massive machinery for the power stations and the railways infrastructure. Platinum's it bounced a little bit, but it's weak at the moment. Gold's weak. Coal hasn't really bounced. So the outlook for this year is probably another current account deficit of at least 6%. And each year that continues, I think the risk gets more and more. So how can that change? I think if the economy slows down, that will reduce demand for imports. The other thing is if our terms of trade improve, which really means the prices of our export goods go up. I don't think in this current environment that's going to happen. And I can't see volumes of exports dramatically improving, maybe slightly, but not sufficient to change it.
So very obviously for the South African story, very dependent, very dependent on export earnings from our resource companies.
Yes.
I wanted to touch on who gets hurt in a currency crisis.
Yeah.
You alluded to some of the. Let's talk about the banks and insurers at the moment.
Yeah.
How do the banks get affected by this?
Well, the worst affected will be the domestic cyclicals. So banks are classified as a domestic cyclical, and some of the more discretionary spending items. So, say for example, vehicle sales could come off 30 or 40%. Clothing to a lesser extent, but banks will be affected on both sides. Their bad debts could go up quite dramatically, and also advances growth would slow down. And much like 2008, 2009, where they had quite a drop in profits and some of the banks halved in value, that is a potential scenario. Insurers would also be under pressure because their most important driver is really bond rates and the stock market. Bond rates would go up, the embedded value would come down because the discount rate would go up. And then also the stock market would probably on net may drop. One would have to look at the net effect. So they may not be as badly affected as banks, but also could come under a bit of pressure.
Now we're talking about a macroeconomic variable here, and obviously, above 6%, it is risky if you look at across cases across the emerging markets.
Yes.
But how much can you let a macroeconomic variable like the current account deficit come into your thinking? Does this mean you're not buying banks at this point, just on that basis?
Yeah, I'm very cautious around banks. I mean, I'm still holding banks. Not much, I have to say that. I've got about 4 or 5% within my portfolios. I don't really see where banks are going because money supply growth is very anemic, even at the moment, of about 7 or 8%. And that's really their core growth. Bad debts have bottomed, and so they're really going to struggle. And they struggle to get their costs down, and that's still growing at 10%. So banks, I'm not particularly excited about. I don't see very strong earnings growth. And also with the Basel III requirements, their return on equities also dropped. So, some people think standard banks are a reasonable opportunity. I don't see any opportunity in it, and it's actually on historic P's quite high.
Okay, so we're leaving banks there at the moment. Just in terms of the insurers, though, you talked about Sanlam.
Yes.
You've obviously mentioned that if the currency blows, then obviously the discount rates that are used are going to be higher, which would reduce the EV of some of these insurers. But
yes.
From a standalone perspective, Sanlam looks like they're really going on the front foot now and expanding into other parts of the world. They've bought insurance companies. Their wealth management division is buying businesses around the world. Is there not a case to make for Sanlam as an entry point into the portfolio based on its earnings projections going forward, or earnings growth?
Yeah, listen, I think if there's a recession in South Africa, the lapses will climb dramatically. And a lot of the businesses they've put on their books, I don't think will be there. It will fall away because people get a lot more sensitive to the expenditure, and there are a lot of surrenders and lapses, as I've said. Also, the discount rate Sanlam's using at the moment is 9.3% to discount their cash flows for their enterprise value calculation, was exceptionally low. I think that's too low. So I think that will undermine the valuation. And the offshore, is a factor, but I don't think it's much more than 10% of total earnings. And I don't think it's big enough to swing it in favor if the rand does fall 20%. It's not big enough to compensate for the other factors.
Just in terms of, I just want to bring this back again to the question around, assisting our exporters. You obviously thought that the Eskom tariff price increase of 8% per annum was positive for exporters. Obviously, our resource companies being very big consumers of electricity. But if we inhibit Eskom too much, surely they've got to be able to expand be able to grow the electricity supply. And if we penalize them now with tariffs that might be too small relative to their funding requirements, are we not just robbing Peter to pay Paul?
I think Eskom's, they had, the price of electricity has more than tripled over the last 5 years. And for gold miners, That's been a massive cost factor, and a lot of exporters, they're very energy intensive. Think of the aluminium smelters, something like Hulamin, and the gold mines as well. And this has really undermined their business models. And really a lot of them are barely viable at current levels. Now, first of all, the Eskom spend, the power station is going to probably cost 150 billion or more just for one power station, which in a global context is exceptionally expensive. So I don't think the government's got value bang for its buck on that expenditure. There would have been, I think they could have funded new power stations a lot more capital efficiently. And secondly, even though the power prices have been tripled, and volumes have come down probably about 5 to 10% for Eskom over the last 5 years, the number of employees has gone up and the efficiencies have dropped. And I think, listen, Eskom really has to become a lot more efficient, and in both in their manpower and procurement, and also on new power projects. And I think they're starting to feel the heat, and they must get a lot more efficient.
Roger, obviously with Eskom operating this, and many people feel it's not as efficient as it can be, is there not the space, and you've alluded to those price increases over the last 5 years, is there not the space now, is it not viable for private power producers to really start getting involved? And I'm talking just outside of the green program that they have for renewable sources. Can we not see a private company come into South Africa, if they were allowed, and build a power plant more efficiently than Eskom, and obviously enjoy tariffs? I mean, is there not the space for that now?
Yeah, I definitely think there is, but government has not really participated. And there's also a lot of cogeneration type projects, something like, say, SAPI or the sugar producers, or even Sasol, who could actually add into the grid. They've already got the capacity. I don't think government really has been forthcoming and really hasn't opened up the rules of the game to allow them to participate. And it's been very slow and reactive. And I think there's a lot of potential for private players, but as the status quo doesn't allow them, really.